The election is coming, with all its glory and all its horror. The election. The 2020 US election. How is it going to affect the economy? How is it going to affect the stock market? This is a question that a lot of people are thinking about, and there are many analysts, both political analysts, economic analysts, stock market analysts, all trying to figure out what's going on. But in this video, what I want to share with you are 2 bits of information that you need to know about the presidential candidates in terms of how their policy affects the stock market, or at least their proposed policy that hasn't even been voted into law. Not only do I want to share with you these 2 bits of information, but I also want to share with you one thing that you can do based on this information. So if you're new to my channel, my name is Alex. I talk about personal finance, investing, and philosophy. And at the end of the day, I hope that my videos ultimately help you think about something different, something new that perhaps you haven't thought about before. And so before we begin, please like, comment, subscribe. I would really appreciate it. And without further ado, these are the 2 things that you need to know about the election and the stock market. The policy that the presidential candidates have and how it affects the stock market depending on whether they have gotten elected or not are the following. It's their position on taxes and on government spending. Generally speaking, if they have a position of lowering taxes, both personal income tax as well as corporate taxes, that tends to result in an increase in the stock market. People have more money, people are going to start spending. Corporations have more money, corporations will start spending. More spending tends to improve the economy and tends to improve the market. And the other aspect, government spending, the government spends more money, they are inherently adding money into the economy. Now, one thing I want to make a clear distinction on is that the economy and the stock market are 2 very, very different things. They are related. They are intertwined in some ways, but they are not the same thing. One way of thinking about it is that the economy is very much related to information from the past, and the stock market is based on information in the future. Take something like the economic data of unemployment. There's already lots and lots and lots of people who are unemployed, and unemployment numbers just come out. Those numbers just describe what's already known. We just know that, well, this is the unemployment number or the unemployment percentage, but it's been that way for a while. We're just getting that information now. But the stock market is different. The stock market is based on future information, things that just haven't even happened. A company's stock valuation may increase just on something that they say. The fact that they're doing R&D on some new kind of project, or they purchased some new company. These are things that haven't actually happened yet, but the market moves as a result. And similarly, when a presidential candidate actually gets into office, their tax laws, their proposed government spending, those things need to be voted in through Congress. Like, they haven't happened yet, but the market simply reacts to what they think is going to happen. So the 2 things, again, is position on taxes and government spending. But now, what is the one thing that you can do with this information? Well, really the question is, how is the stock market going to perform? And the truth of the matter is, I have absolutely no idea. One of 3 things can happen. The market can continue along its merry way. Nothing really major happens. The stock market can go up, and the stock market can go down. And really, we don't have any more information than that. The stock market is not just based on how the election goes, it's based on a myriad of other factors, many of which are super complicated. I created a video about the market cycle, and that the market itself, how the stock market behaves, is based on a variety of different things. The business cycle, the credit cycle, a ton of different factors. Just optimism and pessimism will affect how the stock market performs. So we can't tell what the market's going to do based on who wins the US presidential election. But that's okay. We can still just stay the course. In fact, I would probably recommend the one thing you do is just do what you would normally do. Stick to your investing strategy. And this goes on to a deeper philosophical idea that there are many things that you just have no control over. I have no control over the economy. I have no control over the stock market or who's going to be the president. But I do have control over my own actions. And that's powerful. You have control over your own actions. Even your thoughts and your emotions, your feelings are things that you can't necessarily control, but you can control how you respond. It's one of the most powerful things we have as people. You can't control necessarily how you feel about who becomes president or what happens to the economy or the stock market, but you can control what you do. All right, folks. That's all I wanted to say. Hopefully, somewhat of a short video. I hope you enjoyed this. Again, please like, comment, subscribe, and I'll see you soon.